Hey folks, it's Simon here with your daily video newsletter for Wednesday, the 17th of April 2024. Look, I know a number of people have been struggling in the market over the last week or two, and that is perfectly understandable because we're going through a change in trend, or at least a potential change in trend. Now, if you cast your memory back to the end of October, where we had this bottom, every single dip that we've had in the market since then has been very small, and it's been smothered with buyers, right? Everybody's come in to buy the dip, buy the dip, buy the dip, and it's been the money trade, okay? It's been 100% the right thing to do for the last 5.5 months. Now, let's wind the clock back 10 trading days, right, two weeks ago to this point right here. And we've got a dip, and if you were buying this dip, you were just playing the probabilities, all right? Because that would have been 100% the right thing to do every other time we got a dip that looked like that. All of these dips have been small. 2%'s been the biggest pullback since the start of this rally. Another way of saying that, the market has literally gone up in a straight line. But what's happened this time is the dip buyers didn't rush in. We had this big bearish key reversal. I did a video on the day that this happened, and I said at the time, I'm just going to zoom in a little bit, that really the bulls are not in the clear until we get a close above the high of this bar. I also said that the bears are going to get the upper hand if we get closes below the low of that bar. And guess what? We've been closing below the low of that big red bar recently. Okay, you can see we've had 3 closes below that level, which gives the bears the upper hand. Since then, we've had price breakdown below the 50-day moving average. This all looks like a change in trend. Now, there's an old saying in trading that tops are a process, bottoms are an event. What that means is when the stock market bottoms, you often get this kind of V-shaped pattern, and you can get back in sync with the market and the trend fairly quickly. When a market's going through a topping pattern, it chops you around and it tricks you and it tries to get you wrong-sided all the time. And if you're trying to trade this, all right, the same way you traded this, you're going to get chopped around. So how do you navigate this chop or this trend shift? Well, you cut your position size, you trade smaller, you trade less frequently, and importantly, you remember that flat is a position. You don't have to meet the market in the mosh pit. Now, this trend may yet resolve to the downside, and I sort of warned about this last week looking at the chart of the Dow. The Dow here is looking pretty bearish, and if this is what is in store for the S&P, we may be seeing lower prices for the next little while. If we look at the NASDAQ, it looks pretty similar to the S&P, and this chart doesn't look too impressive, but these have been some big swings we've seen recently. That was a 1.5% down move, that was a 1.2% up move, that was a 1.6% up day, that was a 1.7% down day, so big daily ranges. Lack of clear trend and direction, but things certainly looking a lot less bullish than they have since October. That's what I got for you. I hope it helps, and I'll catch you tomorrow. Thank you.